Hello fellows, welcome to my channel. This channel is entirely dedicated and created for educational purposes only. Here you can find high quality educational materials to learn the basics, whether you are a beginner, more advanced or an intermediate trader. For people that want to see more action, you can check the link on the top right corner. Here we are proving our methods with real accounts. We trade for several years and we show that it can be done profitably. You can subscribe as all profits go to our subs. You can find all the details about our accounts. However, since you are new in trading, using real money is almost forbidden. Practice will make you better, and do not expect fancy cars and fake promises. Trading is real challenging and the numbers are against you. You won't need any money to start and everything is totally free. For most of our videos, you will find a link in the description that will lead you into a more advanced version of the video, but as beginners, I do not recommend. Stay with the basics and demo trading. So let's begin your journey. The market seems to be magnetized and reacts in these areas. Personally is what I use most, and in this episode we will do another review for beginners. So first things first, the name he is commonly called, Fibonacci, was made up in the 19th century. Italian mathematician and numerologist. The Fibonacci sequence is the most well-known sequence and the principles can be applied almost everywhere. Fibonacci didn't invent anything, but I guess it's a catchy name. Simply by starting with 0 and 1, you add the previous number to get the next one. The higher the number, the closer we are coming to the golden ratio, and this is what we want for our analysis. By dividing the next number with the previous one, we are coming closer to the golden ratio number. But what is that number? The golden ratio has been observed for many centuries ago. Sumerians, Egyptians and other civilizations used it. The golden ratio, even though it's been used for centuries, officially is from around 300 BCE in Euclid's scripts, and also Pythagoras observed the existence of this number. As we said, the number has been observed many centuries ago. Fibonacci, or Fibo in short. Fibo extensions and retracements are derived from this golden ratio number. These are the definitions you will need to master first. The number is approximately 1.618. Every single episode of this series has a distinguished element of this number. This ratio can be found in many natural objects. It appears many times in arts, architecture, geometry, and even number of petals and flowers. The golden ratio number is an irrational number, denoted by the Greek letter phi. These are the most well-known retracements and extensions levels: 0.236, 0.382, 0.618, 0.764. And you will see how we get there. To help you more understanding, you must see them as percentages. For example, 0.382 is 38.2% of a price move. You can find another video in the description dedicated to the golden ratio with more numbers. The retracements and extensions will be automatically in all the trading platforms, but after this episode you will be able to find them without using any help. Traders use the Fibo levels as potential support and resistance areas. It is also an excellent way to calculate take profits and stop losses. Remember what we said, that the market is a self-fulfilling prophecy. We are aiming at these common areas. To create Fibo extensions and retracements, we will need what we call swing high and swing low. These are significant points in a price movement. We will give more examples as we continue with this episode. Fibo retracement levels are horizontal lines that indicate the possible support and resistance levels where the price could potentially reverse. Even though Fibo is considered to be leading indicator, it's not perfect. Fibo levels will work perfectly when the market is trending. By using swing high or swing low, we can use these levels. A swing high forms when the high reached is greater than a given number of highs, position around it. And the swing low is the opposite. Each level is associated with a percentage. How much of the prior move the price has retraced. The Fibo levels are 23.6, 38.2 and 61.8. A 50% is also a level used. Personally, I don't use this level. Here's how the numbers are calculated. Let's say from a swing high to a swing low is the 100%. By using the golden ratio number, the first figure is 61.8. We calculate it by divided with phi. The next number, 61.8, again with phi, we have 38.2. Again, divided with phi, we have 23.6. This is how we get these numbers. We can also use the square root to get 78.6. Remember, this can continue for many numbers. We will use the most common ones. In theory, after the price starts to retrace, we'll react to these levels before continuing to the same direction. This is why we said we need a trend. In this example, by using the swing high and the swing low, and since we are in a trend, I'm calculating my entries. Here is my sweet spot to enter the market. Indeed, the market did the move. Again, don't get excited. Golden ratio can be very tricky. We will see later on why. In these examples, and after the market makes the move, everyone can be an expert. But let's see what will you do when the market is live. That's why we are here, and this is the reason you need to stay to demo trading. Since most traders use the Fibo tools, those levels become self-fulfilling support and resistance levels. Of course, goes without saying, price won't always bounce at these levels. Fibo levels do not work all the time. If they did, we wouldn't be here. There is a common idea that the levels will work better in bigger time frames. And now the main idea when you are creating your trading strategy is that it must work in all time frames. This can be a headache, and in my opinion, as a newbie, this must be the least of your problems. When you are identifying a trend, pay attention to the bigger time frames. This might be a multiple weeks resistance, so the market will potentially reverse at that level. To trade with Fibo levels, we need to identify the trend and the retracement. The most common mistake is that actually retracement is the main trend. This will reveal to you when you change the time frame. In this lower time frame, for example, we see a trend. Mr. Fibo is working perfectly and we are happy, so we are getting ready to short the market again. But when we go to higher time frames, we notice that the major trend is exactly the opposite. Well, welcome to the trading world. This is how it works. After you lose the trade, you will notice another Fibo level and another and so on. You will start searching those levels, trying to identify what went wrong. The market also spikes, so even though you were correct in predicting the levels, the prices will spike and get you out of your trade. While Fibo retracement levels gives you a higher probability of success, like any other technical tool, they don't always work. The levels are so many that eventually it becomes a game of chasing numbers. In the next chapter, we will see how you can use these levels by combining with support and resistances, trend lines, and indicators. Using Fibo levels can be very subjective. Only by using these levels, you won't go far. In this fight, you will need more allies. Support and resistances are there to help you set up your trading super Fibo plan. One of the best ways to use the Fibo retracement tool is to spot potential support and resistance levels and see if they line up with the Fibo retracement levels. If Fibo levels are already support and resistance levels and you combine them with other price areas that a lot of other traders are watching, then the chances of price bouncing are much higher. Remember, in trading, we are using statistical probabilities. The higher the probability, the higher the chance to catch that juicy trade. In this example, we have an area of resistance. Now let's add our Mr. Fibo there. Ta-da! A beautiful trade. You will find the relevant support and resistance levels video in the description. The market repeats itself, but not in the same way. Identifying these areas and when and if it is a retracement is not easy. Of course, practice will make you better. Since we are trading probabilities, we want them to be on our side. As you practice more and you watch the market more, this will come automatically. A 1 second executed trade requires months of practicing and preparation. Trend lines are another ally you will need and you can use. The first thing we notice in the market is that the market moves in waves. We have already said that. Now, if you go back to trend lines, check if you can apply these Fibo levels. Well, you guessed it correctly. Of course you can. I think trading starts making more sense as you progress. These random lines are not so random after all. So if we can apply to trend lines, there must be also an indicator that we can do that. Maybe an envelope indicator that you should already know how to use. So again, you guessed it correctly. Of course there is. You can use Fibo levels by combining also the momentum of the market. You also have an indicator and you know how to do that. When the market loses momentum while approaching a significant Fibo level inside the channel or previous support and resistances, it might be a time to strike. In future episodes, we will see more advanced trading scenario and more advanced trading combo techniques. For the moment, you need first to get familiar with the tools that you will use. You already know the candlesticks, or at least ways to identify the most important ones. Well, Mr. Fibo is here also, and you can combine them. Candlesticks formations can lead you to more advanced trading decisions. An exhaust candle in the Fibo level, it might be a signal to enter the market. Spinning tops, dodges, and other significant candles combined with Fibo are areas that you need to pay attention. A 3 inside out help us here to enter the market. In another example, a bullish candle and a reaction of the market at this level is also a signal you need to pay attention to. Now, if you go back to candlesticks, remember what we said. Candlesticks formations means nothing from their own. Combined with the information you already have and the tools you've got, everything will make more sense. Spinning tops, evening or morning stars will be signals too. Of course, you can combine Fibo levels with more advanced formations, and you will see them in future episodes. If it seems that prices is stalling on a Fibo level, chances are that other traders may have put also trades at those areas. The clearer the formation, the stronger they become. This would act as more confirmation that there is indeed some resistance or support at that price. This will help you execute your trade. You may have some concerns about whether the support or resistance will hold, since we are looking at a zone and not necessary specific levels. This is where you can use candlesticks. Again, we will see several candlesticks formations and more advanced patterns in future episodes. An excellent use of Fibo is to calculate your profit target. Again, we will see some advanced techniques to use several targets in your trading, but for the moment, this is not important. In this example, as I enter the market, here are my potential targets. Mr. Fibo helped me to identify future prices. Again, it doesn't mean that the prices will eventually go there. We will see more advanced techniques to secure profits and to not lose your entire trade. As you can see in this example, these areas would have been good places to take off some profits. Another rule that is very hard to follow is to leave your profits running. Of course, there must be a target, but most traders are afraid that the prices will go away. As traders, we need mechanistic rules to enter and exit the trades. Fibo will provide you with these rules, clear targets and exit points. Also, you can use Fibo to make multiple entries. This will need extra calculations, and it will be discussed separately in the money management episode and how you will handle your trading size. We are providing perfect scenarios and examples here. The market is far more tricky than that. Any of these levels may or may not act as support or resistance. Another problem is determining which swing low to start from in creating the Fibo levels. The point is that there is no right way to do it, but with a lot of practice you will become better and you will make better decisions in picking these swing points. You will have an idea of how your tools are working. How you will use them is up to you. Equally important, and maybe more, for a trader is the stop loss. If there is a holy grail in trading, this is the first ingredient. Stop loss is the first rule you need to set in your trade. Mr. Fibo can handle this also. There are a couple of techniques to set up your stops. Goes without saying that we can use stop losses between these Fibo areas. If you enter at the Fibo level, then your stop loss would be the next one. Setting a stop just past the next Fibonacci retracement assumes that you are already confident that the support and resistance will hold. Most traders dive directly when the market approaches these areas. A more advanced trader will wait some kind of confirmation. When you are entering the trade, it's too late. Your stop loss must be well determined. Now here comes the question. How to adjust and if you should adjust your stop loss. Well, market is a living organism. Of course, there must be some rules, but also you need to be agile. Mr. Fibo here will help you with that. For example, you might see that the market is passing your stop loss, but the momentum indicator that you are using is showing that the market is running out of steam. Remember, it's already too late to get your trade back. The market is against you, so you will have to make a decision. This, in my opinion, is the huge difference between a more experienced trader and a new one. The more experienced will identify the potential reversal and will adjust slightly the stop loss. Also, he doesn't search for a single price, but an area of prices. So yes, he might slightly adjust the stop loss. You might lose slightly more, but the potential gains are higher. These decisions will take several months to master. The ultimate stop loss, of course, would be the 100% of the move. The market returned to the previous point. This might be a good signal to exit completely from your trade. If the market prices were to surpass the swing high or swing low, it may indicate that a reversal of the trend is already in place. Your trade idea or setup is already invalidated and you took a non-profitable trading decision. Of course, with a larger stop, you also have to remember to adjust position size accordingly. We will see how to do that. Fibo is not so perfect. Golden ratio is not so golden. In my opinion, it's still one of the most reliable tools to identify potential market moves. The beauty is in the simplicity, and of course, this is a leading indicator, even though it's not an indicator exactly. Unfortunately, in trading, nothing is written in stone. The market is an unpredictable set of behaviors that reacts with no rules. Golden ratio is one of the best trading tools you will find out there. Of course, it's not perfect. You will be able to identify the golden ratio everywhere. Even though there is nothing there, we tend to create patterns. This is in our nature to try to predict the future. The golden ratio can be found anywhere. The limitations while trading with Fibo levels are too many. There are so many levels that the price is likely to reverse near one of them eventually. As traders, you will struggle to identify this point, and this is normal. You cannot beat the market just by using these levels. Identifying also the swing high or low can be a headache. How high or how low? What would be your starting point or your ending point? Don't ignore the trend. Don't rely completely to these areas. Using them correctly might be an issue. Many traders find it complex to calculate, especially when you are using several Fibo between major swings. Eventually the market will pass through these areas, so these magic levels won't work. Follow these simple rules we said. Don't overcomplicate your trading. Thank you for watching. Go back, repeat the chapters you are not sure, and trade safe. So that's it for now. Thank you for watching our videos. I hope you enjoy. You know that we need your subscriptions, likes, and comments for the YouTube algorithm. Help us to make more content and trade safe.